What Your Bank Doesn't Tell You, a podcast by UMushroom.
Welcome to our 13th session of What Your Bank Doesn't Tell You. Today we're going to take up a topic which we've already addressed in a previous podcast. It's the story of UBS taking over Credit Suisse on the 19th of March 2023 in a kind of an emergency efforts together with the Swiss government and the Swiss National Bank. And mid-August there were some very important announcements which we believe deserve a particular attention. And as you know, both of us are very closely connected to Credit Suisse, or were very closely connected to Credit Suisse because we spent quite a big amount of our career working for this bank. So it's kind of dear to our heart what's happening now with the United Bank, UBS and Credit Suisse.
Indeed, and that's also the reason why we follow the news very closely, what comes out of UBS, the latest developments, etc. And as Luba said, on the 11th of August, news came out of UBS in respect to the guarantees they have taken from the Swiss government and also the Swiss National Bank. And just to remind you what happened in March, or basically what kind of guarantees and support measures UBS/Credit Suisse has taken back at that point in time. First of all, it was a 9 billion guarantee by the Swiss government for potential losses generated out of businesses which doesn't match the UBS strategy, and which exceed 5 billion losses which would be taken over by UBS anyway. So we have the 9 billion loss protection agreement. Then in addition to that, we had 100 billion liquidity given to Credit Suisse/UBS. And the first 100 billion, they are kind of were secured by a preferential treatment in case of a bankruptcy of UBS. And in addition, these 100 billion, they are guaranteed by the Swiss Confederation. Then we had another 100 billion, also liquidity provided by the Swiss National Bank and also secured with a preferential treatment in case of a bankruptcy. So we have 2 times 100 billion liquidity and a 9 billion guarantee in case of potential losses out of businesses UBS doesn't want to include. Now we are in the next step, and basically UBS commented on the next steps in respect to these measures.
Yes, and what's important to mention is that on the 11th of August, the bank communicated in an official statement that they're actually paying back all those responsibilities which the Swiss government and the Swiss National Bank has given them. They feel confident that it's not needed anymore, that they are well provided with liquidity, that they can assess also well the potential losses from businesses taken over from Credit Suisse. Hence, they would like to give back what they have effectively used on liquidity and guarantees provided by the Bund and by the Swiss National Bank. And as it turns out, actually that was quite a profitable business. We did our homework, and it's also publicly available information. So basically there is total gains for the Bund of roughly 200 million. We have 40 million, which was actually set-up fees on the loss protection agreement. Then we have another 100 million in terms of commitment premium, which was on the public liquidity backstop agreement. And what we also have is 60 million premium, which was taken on the public liquidity backstop.
Well, it's very complicated how many different components that the P&L or the revenues are made up for the Swiss government and the Swiss National Bank. But we believe that it's really important, given there was kind of a controversy as well in March, whether the Swiss government and the Swiss National Bank should actually support UBS in the takeover, given the amounts of guarantees which were given were quite substantial also in comparison to the household of Switzerland in the end. In our opinion, it's also important now to give an update and make it transparent that basically all the guarantees and liquidity which were provided back then are not used, and in the end it was even a profitable business for the Swiss government as well as for the Swiss National Bank.
And the Swiss National Bank, that's a very important point you're raising, Tonia, because the Swiss National Bank also did a profit, and that's roughly 576 million out of the contractualities which they have closed with UBS. And what we would like to say is it turns out that this kind of a bridge support which the government and the National Bank provided was very needed, right, to secure the stability of the financial, of our, as we call it in German, Finanzplatz Switzerland, or of the financial market Switzerland, or the bank place Switzerland. And it turns out it's closing, this area is finishing with a profit. And yeah, but
now you can say if it's a profit for the Swiss government and for the Swiss National Bank, then yes, of course, UBS has to pay it. So for UBS, these guarantees and liquidity provided was not for free, as we heard. So UBS in total, they paid 730 million Swiss franc for these measures provided by the Swiss National Bank and the government. And now, also to put that into perspective, whether this is a lot of money for UBS or not. So 730 million sounds like a very big figure, but in the very same week also there was another press release by UBS that they are paying $1.4 billion to the US Department of Justice out of businesses they made during the financial crisis in the mortgage business. So it's kind of a fine which was still outstanding, what they are still paying, and 1.4 billion, it's simple math, is double the amount of or roughly double the amount of the 730 million they are paying to the Swiss government and the Swiss National Bank.
Now that we discussed what is the situation around the various liquidity supports of the Swiss National Bank and the government, let's see what does this development in the past few months mean for the various stakeholders. And because we're in an investment business, we're very happy to start with the markets and see and analyze how actually the markets reacted to what the UBS has been doing and what the other banks actually are also have been doing. So maybe to start with the development of the price, at the beginning of the year, we were on the 3rd of January, the bank closed, the stock price of UBS was at 1780 Swiss francs. And yesterday, close of business, it closed at 2060 Swiss francs. That's roughly a plus of 15.70%. And if you want to put it in perspective to other big names, comparables like BNP Paribas, like for example also HSBC or Deutsche, clearly UBS is actually the best performer in their peer group. One interesting fact also, and we've been looking a lot at the analytics around the bank stocks, is the fact that currently the price earnings are rather on the lower side. UBS is roughly at 1086 from what we saw recently. Goldman is rather on the higher end for banks. It's 13 point, almost 14. And but there are really big names like HSBC and BNP, which are around 6. And for those of you out there who are not familiar, what is price earnings ratio? That means actually what is the value which the capital markets assign to $1 or €1 earnings from the respective company. Comparison to that, and you see the price earnings are very low. Just to put it in perspective, the techies are quite on the other extreme. Currently, the big names like Meta Platforms and like Apple are around 30, Microsoft as well, 30, 33. We have, of course, very extreme cases like NVIDIA, which are in the field of 200 and something. Long story short, banks currently seem to be still conservatively valued, and that put in perspective with the current interest rate, rising interest rate environment. There is a general rule that when interest rates rise, the banking sector actually higher profits are expected. So from that perspective, from pure market perspective, it's interesting for those of you out there who are following the markets to keep a closer eye on what's going to happen in this sector and the names which we've been mentioning.
So another stakeholder is the Swiss government and the Swiss National Bank. Given UBS got rid of any of the supports they were given earlier this year, This also means that UBS might have more freedom in respect to business decisions, in particular when it also comes to the potential integration of the Swiss business of Credit Suisse, given there is a big overlap between the UBS Swiss business and the Credit Suisse business. There it might be important for them to be in a position to take an independent decision how they want to go forward with that business. But it won't be 100% independent, we assume, given UBS is a very big bank. In the meanwhile, it was a big bank already before the merger or the takeover, and now it's an even bigger bank. Just to give you a number, the balance sheet of UBS is totaling at 1,300 billion Swiss franc. This compares to the Swiss budget by a factor of 16. So given the size of UBS, it's very likely that the Swiss government will always have a very close eye on the business and how it's developing, given UBS is a system-relevant bank and there is this too big to fail problematic in the air.
That's kind of a drama that we have since 2008, the too big to fail. An interesting stakeholder group which we also follow closely, and it's very inspiring also to see what their writing is. Their voice is saying that the bank is too big and that the future, and the question here is, does the business model of banks like UBS, Deutsche, BNP belong to the future? Are those huge organizations actually really efficiently manageable? Can you steer such a huge group of people, infrastructure, technology, and adjust respectively when innovations happen? Can you implement innovation in a reasonable way? And the critical voice is saying that that's not the case and that probably that's going to fragment at a point of time. And one thing which we've been seeing is also how the balance sheet is put into relation to the capital market price, right, to the market price of the stock. And it's actually below 1. It's something along 0.6, if I'm not mistaken. And what does that say? That says that the market actually values 1 Swiss franc balance sheet assets of the bank, valued according to the balance sheet rules, with less than 1 Swiss franc. I.e., there is a lot of potential for restructuring, reorganization, potential splitting of businesses, etc. Strategically, it would be very interesting also to follow a close look what happens with those big giants in the financial industry.
True. So we see there are still plenty of challenges for UBS. Also, an integration of that size isn't a walk in the park. So it takes a lot of effort from both sides to actually do this integration. And it also means that UBS will be busy with its own strategy and might have less capacity to take care of clients. But there are also plenty of opportunities, as we have heard, because the general environment for banks is improving, and we are very curious to see how UBS develops, and we are very happy to give you an update maybe in a couple of months' time. Until then, and our next podcast, we wish you all the best. It was a pleasure to have you here with us again. If you have any questions, write us to hello@umushroom.com. And we are very much looking forward to see you soon. Bye-bye.
Bye-bye.
Money!
What Your Bank Doesn't Tell You, a podcast by UMushroom.